Hello everybody, welcome to the week 11 of our tutorials. As usual in this video we are going to solve all the questions that are in our tutorial sheets that are posted on the blackboard, but some of them we are going to discuss into more details in the classes. Well, actually all of them we are going to discuss into more details, but some of them in particular. So we are going to start with the question number 1, which asks us cyclical unemployment is the most likely, and the correct answer here is B, in a recession. Question number 2, structural unemployment occurs when an industry has lost its competitiveness, so the correct answer is C. You have covered this into more details in your lectures. Question number 3, which of the following is the demand side policy to reduce cyclical unemployment? So the correct answer here would be answer D, which is increased government spending on capital goods. Question number 4, if an economy has high levels of involuntary unemployment, this means that the economy may be operating within the production possibility frontier. So the correct answer is answer B. Question number 5, the Phillips curve shows the relationship between inflation and unemployment. So the correct answer would be answer B. Question number 6, according to the expectations augmented Phillips curve, there is no long-run trade-off between the two variables. So remember that the curve that you've been shown on your lectures is the short-run curve. So the correct answer here is the answer B. Question number 7, when inflation is 2%, what happens to the prices? So the correct answer here is answer D. The weighted average of prices is growing by 2%. Remember that inflation is usually measured by consumer price index, which is looking at the aggregate, at the number of goods, not just one. So question number 8 is, if prices in general are falling, this is called deflation. Inflation means that the prices are rising. Question number 9, which of the following is the example of deflation? So as we just said, deflation occurs when the prices are falling, so the correct answer here is D, prices are falling. Question number 10, direct taxes include, and we are offered costume duties, excise duties, VAT, and income tax, and the correct answer here is D, income tax. Question number 13, in a boom, the government budget should automatically improve because of more revenue and less spending on benefits. So the correct answer here is answer B, which states should automatically improve because of the revenue and less spending on benefits. So question number 14 is the average rate of tax is calculated as the total tax paid divided by total income, so that is the answer D. Question number 15, the total amount owed by government is called the national debt, so the correct answer is answer A. In a recession, question number 16, in a recession, the budget position will automatically worsen, so the correct answer would be answer C. Question number 17, the relationship between tax rates and the total tax revenue for the government is shown by the Laffer curve. You've been already told everything about the Laffer curve on your in your lectures. Question number 18, one way of measuring unemployment is to interview people to find out the number of people who want to work but are not employed, and this is called labor force survey. Question number 19, supply side economics is most useful to reduce. The correct answer here is answer C, the natural rate of unemployment. Question number 20, the natural rate of unemployment is the level of unemployment at the full employment level, so the correct answer would be answer C. Question number 22, which of the following is not a source of revenue for UK government? And we are offered debt interest, national insurance contribution, taxes on income, and taxes on wealth. And the correct answer is debt interest, because that's not something that the government is earning, but rather is giving away. Question number 23, suppose, so we are going to look at the question number 23 on the board. Suppose the only revenue taken in by the government is in the form of income tax and tax rate is 10%. So rate of tax would be 10%. If aggregate income is 800 billion, and government outlays are 100 billion, then the government budget has, and then we have to decide whether the government has a surplus or deficit and by how much. So the government income would be, aggregate income is 800 billion and the government is charging 10% tax. So 10% of 800 is 80 billion. Is what government is earning. The government outlays are 100 billion. So the difference between what government is earning is and what government is spending is our surplus or deficit. So in this case, the government is earning 80 billion, it is spending 100 billion. So the difference is minus 20 billion, which means that the government is actually running a deficit of 20 billion. And the correct answer here is answer D, 20 billion. So next we have question number 24, and we are given a table here. Consider the table below with the data for the country's budget level. The data shown is that the government is running, and then we again have to determine whether the government is running a budget surplus or deficit and of how much. So the table, another marker is needed. So the table is the following. We have components that are given, and we have their value in billions of pounds. So first we have taxes on income and wealth. And that is 50 billion. Then we have national insurance contributions. Which are 40 billion. Then we have taxes on expenditures. Which are 15 billion. Then we have other receipts and royalties. Which are 7.5 billion. Then we have transfer payments. Which are 60 billion. Then we have expenditures on goods and services, which are 82.5 billion. And finally, we have debt interest, which is 7.5 billion. So we are asked to determine whether the budget, the government is running a surplus or deficit, and by how much. So we are looking at Government income are taxes, so we have 50 plus national insurance contributions, which are 40, plus taxes on expenditures, which are 15, plus other receipts and royalties, which is 7.5 billions. On the other hand, the government is spending transfer payments, which are 60 billions. Then it's spending its expenditures, obviously, which are 82.5 billions. And then it is spending a debt interest, which is 7.5 billion. So we have 50 plus 40 plus 15, which is 105. Plus 7.5, which is 112.5, minus we have 60 plus 82, which is 142.5, and then 7.5, that is 150. So actually the difference is minus 37.5, which means that the government is running a deficit of 37.5 billions. So the correct answer is answer D, 37.5 billions. Next question is again related to this table, and it asks us, consider the above table with the data for a country's government budget. Government outlays are equal to then how many billions? So it's question 25, and out of all the components in this table, we should determine what are actually government outlays, and those are transfer payment, expenditures, and then debt interest. So we have transfer payment of 60 plus expenditures of 82.5 and plus debt interest, which is 7.5. So in total, this is 150 billions. So the correct answer is answer C, 150. Next question is question number 26. An increase in the government, and then we have a blank line reduces the government, and then we have blank line again. So an increase in the government budget surplus reduces the government debt is the correct answer to this question, and that is the answer C.
Black stuff. Just wipe off that. Yeah. Okay. I'm being finicky. I'm sorry.
Yeah, so that would be it for this week of our tutorial. So hope you enjoyed this video, and I'll see you in class next week.
Bye.
Bye.